Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we're looking at Aeluma Inc., and let's just say one of their directors decided to do a bit of a U-turn on a trading plan. So what is this all about? Well, it looks like Aeluma Inc. is reporting on something that didn't actually happen. Back in June, one of their directors, a Mr. Stephen Denbars, put in place a trading arrangement. Now, don't let the fancy name fool you. A Rule 10 B5 to 1 trading arrangement, or as they call it here, the 10B5 to 1 plan, is basically a pre-arranged plan for company insiders to buy or sell their company, S stock. It is a way to avoid any accusations of trading based on secret information, because the plan is set up when the insider doesn't have any special knowledge. This particular plan was set up to sell up to 130,000 shares of Aeluma, S common stock. The sales were supposed to happen between the 6th of October of this year, 2025, and May 6th of next year, 2026. The prices and how those prices would be determined were all laid out in the plan. Think of it like setting up an automatic sale for your stocks at a certain price or over a certain period. But here is the kicker. On the 16th of September, just a few months after setting up the plan, Mr. Denbars decided to cancel it. That means none of those planned sales actually happened, and they want to be happening in the future under that specific plan. So this report is essentially about a plan that was put in place and then taken back. It is kind of like announcing you are going to bake a cake and then deciding to order pizza instead. The report itself is dated the 19th of September, 2025, which is a few days after this cancellation took place, making sense. Now, let's think about what this actually means for Aeluma. The company's common stock is traded on the Nasdaq stock market under the ticker symbol ALMU. This registration information is pretty standard stuff for any publicly traded company, telling us where it is incorporated, its commission file number, and its IRS identification number. The company is based in Galeta, California, and interestingly, Aeluma is identified as an emerging growth company. This means it is a relatively new company that can take advantage of certain relaxed regulatory requirements, which often means they don't have to follow some of the stricter accounting and reporting rules that older, bigger companies have to. This checkbox here confirms that Aeluma is indeed an emerging growth company. This has implications for how often they report, what they have to disclose, and how they present their financial information. It is often a strategic choice for younger companies to manage the burden of compliance. So, we have a director who put a stock sale plan in place and then cancelled it. While this filing doesn't give us the reasons for the cancellation, it is worth considering why an insider might do this. Perhaps the market conditions changed, or maybe the director's personal financial situation shifted. It could also signal a change in outlook for the company. If a director thought selling shares was a good idea at one point and then decides against it, it might imply they now see more upside potential for the stock. Or it could be for entirely unrelated personal reasons. Without more information, it's hard to say definitively. This filing is made under a specific section of the Securities Exchange Act of 1934. This particular form, the 8K, is for reporting significant events that happen between the regular quarterly or annual reports. So changes to insider trading plans, especially significant ones, are often considered a material event that needs broad disclosure to all investors. This ensures everyone has the same information at the same time. It is what they call Regulation FD, or Regulation Fair Disclosure. Aeluma is incorporated in Delaware, which is a common state for businesses due to its corporate-friendly laws. This is their commission file number, a unique identifier assigned by the SEC. And this is their employer identification number, also known as the taxpayer identification number for businesses. Their principal executive offices are located at 27 Castilian Drive Ive in Galeta, California. While there are no financial tables in this particular filing, remember that typically these filings, especially the more comprehensive quarterly and annual reports, contain a wealth of financial data. If there were financial tables here, we'd be looking at revenues, profits, cash flows, debt levels, and all sorts of other numbers that tell us how the company is performing financially. For instance, we'd analyze how revenue has grown or if profits are increasing or decreasing, and what that means for the company's health and its ability to operate and grow. We'd also be looking at expenses to see if they are under control. In the grand scheme of things, this specific filing is quite minimal. It is focused solely on the termination of a director's trading plan. It doesn't provide much insight into the company's operational performance or its financial standing. However, it does raise questions about insider activity and signaling. From what we can gather, Aeluma is a company that is navigating the public markets as an emerging growth entity. Their stock is traded on Nasdaq. The fact that a director initiated and then terminated a trading plan is a piece of insider information, albeit one that is being disclosed. It is a small snapshot, but it's a window into the lives of the people running the company and their decisions regarding their own stake. The report is signed by Jonathan Klamkin, who holds the important roles of President, Chief Executive Officer, and Director. This indicates that the company's top leadership is aware of and responsible for these disclosures. So, what is my take on Aeluma based on this filing? Well, honestly, this filing alone doesn't give us a lot to go on to assess the company's overall direction or financial health. It's purely a disclosure about an insider trading plan. There are no financial results to analyze, no new business strategies announced, and no major risks highlighted beyond the standard boilerplate you might expect. The main thing to consider here is the insider sentiment. A director setting up a plan to sell stock and then cancelling it could be interpreted in a couple of ways. It could mean they no longer feel the need to sell, perhaps because they are optimistic about the company's future performance. On the other hand, it could mean their personal circumstances have changed, or perhaps the plan itself was flawed and they are reconsidering their stock sale strategy altogether. For investors, this filing is less about operational insights and more about understanding insider behavior. It's a tiny piece of the puzzle. To truly understand Aeluma, you'd need to look at their earnings reports, their market competition, and any other announcements they make. This filing by itself is more of a news tidbit about internal dealings than a deep dive into the company's business. Alright, that is our breakdown of Aeluma Inc.'s latest filing. What is your take on this director's trading plan that never was, and what might it signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate secrets. And as always, don't forget to check out our Discord community, linked in the description for more exclusive content and discussions with fellow corporate decoders. Thanks for watching, and we'll see you in the next video.